All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today is January 15th, 2026, and the Commodities board is flashing red this morning, nearly across the board, after separate comments and press releases from the White House yesterday, late in the day, sent metals prices lower and energy prices lower. We got both within just a few hours. Let's talk about oil. Last night, it seemed like strikes on Iran were imminent. We had planes were in the air. The OSINT channels were blaring that, okay, military aircraft are taking off. The airspace over Iran was closed. You could see all the commercial airliners were flying around Iran. Everybody knew something was coming. And then all of a sudden it stops. And we get this press release from President Trump. Or not a press release, comments from President Trump that, I'm paraphrasing here, I'm going to use my best Trumpian language, had some conversations with some very big, important, very knowledgeable, awesome people, and they say the killing has stopped. No details whatsoever, maybe some kind of back channel negotiation, whatever it was that happened. President Trump suddenly goes from imminent airstrikes to, they tell me they're going to stop killing the protesters, and I'm happy about that. So we're not going to bomb them right away. And the price of oil drops. Oil is down about $3 this morning, about 4.5% lower on this news. WTI crude prices, we had commented over the last couple of days how all this rhetoric around Iran and the protests in Iran were driving WTI prices higher. That reversed yesterday. Now, this doesn't necessarily mean this has been called off, that it's not happening. It's actually following some similar playbook that we saw in Venezuela. In the weeks leading up to the Maduro raid, the U.S. Navy and Air Force had flown several missions close to Venezuelan airspace. The point of those missions is to get them to turn on their radar, their surface-to-air systems, so we can find out where they are, map their air defenses, and better plan a potential strike. It's possible that what happened last night in the airspace around Iran was something similar, that it was really just a listening mission, just get them to turn on their radar and tell us where they are. The same thing happened in Venezuela. Also, around the same time, we got news that the Abraham Lincoln Carrier Strike Group is being redirected from the tip of India to the Arabian Sea. That is an asset that would be used in a potential strike on Iran. You may also recall that a lot of the assets in the Gulf were pulled out and sent to the Caribbean for the Maduro raid. So they're redeploying Navy assets once again, shuffling pieces around the board. It's not exactly an all clear in Iran, but for the time being, no missiles are flying, no bombs are dropping. And at least some guy somewhere told somebody on our side that they're not going to execute protesters. Let's take that as a win. I don't know if any of that or all of that is true, just what they're saying from my ears to yours. Also going on this morning, we also had a big drop in metals prices yesterday. Gold and silver both dropped. We've got gold is holding just below 4,600 here. Silver sold off yesterday from a high of $93 and change all the way down. We went as low as 86 and change last night. We're hovering around $88 right now. So what happened? President Trump essentially punted on tariffs. Some might call that the taco trade once again. Use whatever rhetoric suits your political dispositions. The Section 232 investigation into rare earths. This was a lingering risk in the metal space. We didn't know if these tariffs were going to come in or not on silver. The market was largely not expecting tariffs on these rare earths, on which to include silver, but at the same time, it remained a risk. President Trump comes out and says, instead of blanket tariffs on rare earth minerals, what we're going to do is we are going to try to negotiate bilateral agreements to ensure supply, whatever that means. He also floated price floors instead of tariffs. He didn't rule out tariffs. He just said, for now, we're not going to do them. For now, that's a big rider there. But price floors, we saw something similar with that MP Materials deal a couple of months back when the government first took a stake in that rare earth company. Basically, the U.S. government guaranteeing a minimum price on these imports of these rare earth metals. It's meant to provide a guarantee for people who want to produce those metals, maybe want to invest in mines or refineries in Europe, in South America, wherever, anywhere but China, FFS. The U.S. government puts these price floors on that product, guaranteeing them a return on investment. It reduces the risk profile. It makes it easier for them to get financing, more willing to take the risk. But at the end of the day, it's price controls. It's an artificial market signal. Is that preferable to tariffs? I don't know. Neither is really optimal. Neither is a free market solution. But, you know, when you're steamrolling towards World War III, it's not the time to be an idealist. At the same time here, what's really happening is President Trump is trying to preserve, as long as possible, the trade truce with the Chinese. The U.S. bond market threw a freaking fit last year. Tariffs worried everybody too much, too fast on Liberation Day. The bond market melted down after 90 days and punt and 90 days and punt and 90 days and punt. Finally, we got some kind of an uneasy truce with the Chinese. And President Trump doesn't want to upset that. And so no Section 232 tariffs on rare earths. They're going to try price floors. No details, again, provided. We'll just have to wait and see what that does. Now, that sent metal prices lower last night. Even as that was happening, we got this story from APMEX, one of the biggest precious metal bullion dealers. They're limiting orders for physical metal to $10,000 or more. Sorry, little guys. They're slamming the door in your face. They're being overwhelmed with orders. They're backed up for months. At least that's the story that they're telling us. And so if you want to buy precious metals from APMEX, you have to buy at least $10,000 worth of stuff now. That obviously prices out a lot of people. Other precious metal dealers are taking advantage of that story. We are seeing premiums spike. Premiums on American Silver Eagles, $13, $14 across the board, even higher this morning. So look, retail is going FOMO on metals. A lot of people probably were saying yesterday at 93, man, I can't wait for a price slam so I could buy some metal a little bit cheaper. Well, you got it via the tariff announcement. Will the dip buyers show up? I don't know. But either way, the precious metal dealers are jacking up their premiums to go along with that dip. So the final price paid isn't really that affected. Also, what we got going on this morning, bank earnings. We've got bank earnings from Goldman Sachs and Morgan Stanley, and it's pretty much the same story in both cases. Equity trading and wealth management are booming. The upper K of our K-shaped economy is doing very well. Hey, all you guys struggling with inflation and the cost of living crisis, you'll be happy to know that your rich counterparts are unaffected by your turmoil. Doesn't that make you feel better and make you sleep better at night? Make you feel all warm and cozy inside? Yeah, nothing surprising there. And hey, look, the wealthy are doing very well. Is it any surprise that we keep seeing monetary and fiscal policy from our illustrious leaders that continues down this path, that keeps inflation running hot, that keeps the upper K getting bigger and the lower K getting smaller? Is it any surprise that we keep getting more and more of this? And then is it any surprise that we're looking over at gold hovering around $4,600 and silver threatening 90 again? I'm beginning to think these things might be related. We also got Taiwan Semiconductor posted another record quarter, profits up 35%. The endless quest to ignite money on fire continues in the AI bubble. That is 8 consecutive quarters of profit growth for Taiwan Semiconductor. We got an update on the memory shortage this morning as well. Another article about this one in Bloomberg. Apple and HP, they're talking about now, are facing the tough choice between raising prices and risking further upsetting consumers or seeing their profit margins compressed because these higher memory prices, this memory shortage, it's going to affect people who make computers, laptops, PCs. It's going to affect gaming consoles. It's going to affect smartphone makers. It seems like this memory shortage is going to affect everybody except the AI companies that are causing it. Somehow all these articles that mention all the struggles with the memory shortage and the higher memory prices, they don't mention the people that are actually buying all of this freaking memory. No mention of their margins, of their profits, of potential shortages in their supply lines. No, it's just everybody else. Kind of like the same thing with electricity and power, right? The higher electricity costs nationwide are hurting poor people. They're hurting all these other industries. They're hurting everybody but the unprofitable data centers that are consuming all the power. It's amazing how the narrative is shaped around preserving this AI bubble at all costs, isn't it? We've got BlackRock. Their assets under management has reached $14 trillion. That's 14 trillion with a T. Everybody just give all your money to BlackRock. What's the worst thing that could happen? Oh, they have doubled their private credit business. Well, me and my big mouth, I just had to ask. Yeah, private credit. Okay. Hey, Blackstone is getting into private credit too. Blackstone. And we were talking about BlackRock a second ago. Now we're on to the stone. Blackstone has cut a deal with 401k administrator Empower. And what do you think they cut that deal with 401k administrator Empower for? If you guess to dump alternative assets, in other words, dog shit, private credit and private equity investments into your 401k, congratulations, you've been paying attention. Just as all this happens, Cov Light deals are becoming more common. What is Cov Light? Is it some shitty non-alcoholic beer that's popular with soy boys? No, Cov Light is private credit debt instruments with none of the protections to protect lenders from a downturn in the underlying business. In other words, they're taking more and more risk. Why? Because it's not their money, it's your money. Pay attention to what's happening in these alternative assets. And last but not least, we've got 2 fatal crane collapses in 2 days in Thailand. Same country, same company behind both crane collapses. We're going to talk about that one at the end of the story, possibly related to the collapse of the Chinese housing market. Maybe that's a stretch, but I think it might be related. Guys, we've got a lot going on this morning. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. Don't forget that like button. You new guys, hit that subscribe button so you can come back tomorrow and have your wake-up juice with the melon heads, because we do this every business day. And right now, the S&P 500 is higher by 37 points, about 0.5% in the green this morning. The Dow is also higher, a little bit less, though, about 10 points up, 0.02%, pretty much flat on the morning. And the NASDAQ is leading the way higher. Those Taiwan semiconductor earnings are propelling the AI stocks this morning. NASDAQ up 271 points ahead of the open, 1.07% in the green. Meanwhile, the dollar is a little bit stronger this morning, 99.39. That's up by about 31 basis points. That's going to put a little bit of pressure on commodities like gold and silver and also on stocks. Looking over at the bond market, we've got a little bit of a movement higher in the middle of the yield curve while we're flat on the two ends. That's kind of interesting. The 30-year yield, 4.792%. That's lower by a fraction of a point. Meanwhile, the 10-year yield at 4.156%. That's up almost 2 basis points. The 2-year yield is the big mover this morning, 3.550%. That's up 3.5 points. And the 1 month is barely moving, up 0.5 point at 3.631%. Looking over at Bitcoin, the rally continues. The debasement trade was all the rage yesterday. We're seeing a pullback in metals today on those tariff announcements. Not affected is Bitcoin, which is hovering around 97,000 here. We're up from just 90,000 a few days ago. So we've seen a $7,000 rally in Bitcoin over these last few days. We'll see if this one has any legs, or is this just a dead cat bounce? But the action this morning is in the commodities board. That's where most of the news is happening here. Gold is holding up pretty well here. Now, gold is just being dragged down by silver. There was never really any question about tariffs on gold with this rare earths investigation, but it's along for the ride because of the move in silver. We've got a spot gold, $45.99, down about $27.5 here, or 0.6% lower. Meanwhile, February COMEX gold futures at 46.02, just a couple of bucks higher, off by $33 this morning, or 0.7%. All things considered, gold holding that 4,600 level is pretty impressive here after the move that it's had recently. Spot silver, another volatile morning here. We were as high as 93 yesterday. We went as low as 86 and change last night. Big intraday swings in silver continuing here. For now, spot silver is at 89.14, off by $4 this morning, or 4.3%. March COMEX silver futures are at 88.93. That's down 2.4%, or down $2.40, or 2.7% lower. Now, interestingly enough, we are still in backwardation a little bit here. 89.16 versus 89.25. The London price is about 25 cents higher than the COMEX price here. So the tariffs was one of the things that was the risk of tariffs was one of the things that was keeping metal here in the States. Now that that risk has been at least punted on, are we going to see this backwardation give way to contango where the market normally lives? I don't know. But you would think the metal that was staying in New York because of worries about tariffs, some of that might be growing legs here heading back to London, where there's at least a couple of pennies of arbitrage. Although silver's a big clunky metal, it's hard to move it in weight to capture a narrow arbitrage like that. So maybe not. Copper is down by about 1.5% this morning. Platinum is essentially unchanged, holding up pretty well here at 23.85 for April platinum futures. Palladium, meanwhile, down 2.6% this morning. And crude oil off by 4.25%, $2.65 lower for February WTI crude. We're at 59.37. We were as high as 62 yesterday. So let's talk about oil. We got this one in CNBC. Oil prices fall 3% after Trump says killing has stopped in Iran. Oil prices fell 3% on Thursday after comments from U.S. President Trump calmed fears that an American strike on Iran could be imminent. Brent crude futures dipped by 2.8%. WTI crude lost 2.9% to trade at 60 a barrel. Let's scroll down a little bit here. Speaking to reporters on Wednesday, Trump said he had been informed by very important sources in Iran that the killing has stopped. There's no plans for executions. I've been told that on good authority, he said, adding that the White House would watch how the situation unfolds. So, look, is this true? Has the killing stopped? I don't know. It's the internet blackout is still going on there, so there's no way to verify any of this information. Who are these very important people in Iran that told him that? We don't know. Can they be trusted? We don't know. All we know is no bombs, no missiles for now. That's really all we know. And the oil market likes that. Prices going lower on that news. Meanwhile, silver tumbles after Trump holds off on critical minerals tariffs. We covered this one pretty much in the opening monologue, guys. I'm not going to get too much into the details here. We've already covered this ad nauseum. The one thing I would emphasize here is it really seems like preserving this truce with China is very important here. We've seen a couple of concessions in the semiconductor space recently, and now concessions in the critical minerals space. They're trying not to reignite this trade war, which, again, it's kind of like the thing on the Korean Peninsula. It never really went away. They just kind of stopped shooting for a little while. So we'll see if this holds for now. That's probably what drove this. And, of course, silver was a question mark. Silver had been added to the critical minerals list. It looked like if they put blanket tariffs on critical minerals, silver would be included. That was driving some speculation that silver prices were headed higher. And, well, silver was due for a pullback regardless. I mean, maybe this was just a sell-off looking for a reason, and this just happened to come along at just the right time. Either way, guys, we're still holding here at $88. So, I mean, it's not like silver price got slammed or anything. It's $88 silver. Let's look at this in the context of where we were a couple of months ago. Also, very interesting news yesterday. I had a couple people send this to me, this story from APMEX, and my initial reaction to this was this has to be BS. I thought it was probably fake news, but then I went to the APMEX website. There it is, front and center, this little yellow bar across the screen. Historic metals demand continues. Read a letter from the CEO. I'm going to skip all the yada yada, the unprecedented demand. Oh, this market is crazy, surging silver, all this reasons. And I want to bring you down to this very important bullet point in the letter here. And this is the story. On the retail purchasing side, we are currently 4 days behind in receiving your orders. We have instituted a $10,000 minimum to help keep volumes down and improve service levels. So if you're looking to just buy a couple of pieces of silver, if you're a new stacker and you're thinking about buying one 10-ounce bar just to see what it feels like, they don't want your business. They can't handle it right now. They're saying, "Oh, our staff is working around the clock. We're so busy." They just don't want your business. So when I saw this, my immediate reaction was, well, the other bullion dealers, they're going to jack up their premiums now off of this story. And sure enough, that's what we got this morning. We are looking at findbullionprices.com. Guys, I freaking love this website. I'm not sponsored by them or anything like that. but this website is pretty good at comparing prices. This is like the kayak for metals, if you will. And just so you can see here, here's what the cheapest American silver eagles are. This guy on eBay, I ignore this one. Typically, I don't buy my metal on eBay if I can help it. And it's probably just some guy who hasn't raised his price yet, and he left it there. It's probably gone by now. The important thing is to look at Summit Metals, Bullion Express, SD Bullion, Money Metals Exchange, APMEX, Bullion Star. Look at the dealer premiums on American Silver Eagles. The lowest one, $15.20. Most are in the 15, 16 range. Bullion Star is $18.80. Guys, a month ago, these were $2 at the bottom. You could find American Silver Eagles for $2 under spot in some places a month ago. Now the premiums have ballooned to $15.20. So yesterday, this was about $13. Now we're looking 15, 16. Premiums are on the rise here, guys. Retail is FOMOing in to this metals rally. It's amazing because all last year, we watched the price cross $30. The stackers were net sellers. Premiums were in the basement. $40, stackers sold. $50, stackers sold. $60, stackers sold. Premiums stayed low right up until they broke $70. And then everybody decided I was a seller at 50. Now I'm a buyer at 70. And the premiums started to rise. And of course, now the premiums are blowing out here as we go into the 90s. So definitely FOMO, guys. It's any way you look at it. This is retail FOMO in the physical space. Meanwhile, we got bank stocks reporting this morning. The big Wall Street banks here, the investment banks, Goldman and Morgan Stanley, and it was pretty much the same story on both sides. Goldman equity traders smashed through Wall Street revenue record. Goldman Sachs blew through expectations for equities trading revenue, netting an all-time Wall Street record of $4.31 billion in the final 3 months of last year. That trumps the previous all-time high for any bank set by Goldman in the second quarter of 2025. The bank also raised its dividend to $4.50 a share, it said in a statement on Thursday. Goldman has fine-tuned its trading machine and expanded its investment banking share under CEO David Solomon, who has reasserted control and refocused the firm after a precarious period triggered by a failed foray into consumer banking. Net revenue for the bank in 2025 was $58.3 billion, its second best year on record. Without a multi-billion-dollar impact from the sale of its Apple Card portfolio to JP Morgan Chase, it would have been a record. Investment banking fees were $2.58 billion for the quarter, a fourth quarter record for the firm, and beating the consensus of analyst estimates compiled by Bloomberg. It was a fantastic quarter from Goldman Sachs. And yet, look at the stock. It's down pre-market, 1.85%. It seems the banking expectations were just way out over their skis here. Because, look, the bank earnings were not bad. We've pretty much seen all the big banks now. They weren't bad. They were good. You know, I would say they were certainly above zero. They weren't a net negative, but the market was just pricing such high expectations that almost all of the banks sold off after their earnings, despite reporting pretty good numbers. Maybe it's got something to do with the fact that Goldman Sachs is up 63% over the last 12 months. That might have something to do with it. The banks have had an amazing run these last few years here. Morgan Stanley, same thing. Morgan Stanley tops estimates driven by wealth management. Oh, that upper K is just doing so well. Morgan Stanley on Thursday reported fourth quarter results that exceeded Wall Street expectations on the back of strong revenues from wealth management. Earnings per share of $2.68 beat expectations of $2.44. Revenue at $17.89 billion, above $17.77 billion expected. The wealth management unit posted $8.4 billion in net revenue in the most recent quarter, up from $7.5 billion a year earlier. For the full year, the division generated a record $31.8 billion in net revenue. The rich are doing great. Investment banking was also a standout for the firm. Net revenue for the segment jumped 47% to $2.41 billion from $1.64 billion a year earlier, driven by stronger advisory fees as completed M&A activity increased across all regions. Trading desks across Wall Street have been busy in the past year, while investment banking showed renewed momentum with a pickup in mergers and IPOs. Meanwhile, stocks are trading at record highs, which could provide a boost to Morgan Stanley's massive wealth management business. And it's more of the same. Another good quarter, fantastic numbers for Morgan Stanley, and yet the stock is down $179.96, off by 95 cents, or about 0.5% ahead of the opening bell. But once again, victims of their own success. Morgan Stanley up 45% over the last year or so. So selling off on good earnings here. Meanwhile, Taiwan Semiconductor delivers another record quarter as profit jumps 35%, fueled by robust AI chip demand. We just keep sending that money into the incinerator, and Taiwan Semiconductor is the beneficiary. Taiwan Semiconductor Manufacturing on Thursday reported a 35% increase in fourth quarter profit, beating estimates and hitting a fresh record as demand for AI chips remained strong. Revenue of 1.046 trillion new Taiwan dollars, that's about 33.73 billion US, versus 1.034 trillion expected, so it's a beat in revenue. Net income 505.7 billion new Taiwan dollars versus 478.3 expected. The world's largest contract chip maker has now posted year-over-year profit growth for 8 consecutive quarters. That's 2 years if my calculations are correct. The company's high-performance computing division, which includes AI chips and 5G applications, made up the majority of the sales in October-December quarter at 55%. Demand from smartphones made up 32% of sales. So it's clearly an AI story is really what's driving Taiwan Semiconductors. However, their CEO added that chip demand tied to consumer electronics, such as smartphones and PCs, could be affected by the ongoing memory shortage and price hikes. During the earnings call on Thursday, Taiwan Semiconductor Chairman and CEO C.C. Wei acknowledged the memory shortage, but argued that Taiwan Semi is focused on high-end smartphones, which are less sensitive to memory prices. Again, why is it these memory prices? It affects phones. It affects video games. It affects computers. It affects everybody but Jensen and Sam. Isn't that amazing? We must preserve the narrative at all costs. And we got more talk about this memory shortage. Apple and tech hardware stocks face a crisis as memory prices soar. Again, it's Apple, the phone makers, the computer makers, not the AI guys, though. No crisis there. Soaring prices for memory and storage components have turned companies like SanDisk, Micron, and Western Digital into the hottest stocks in the market over the past year, but they're causing headaches for many of their customers. Hardware companies from Apple to HP are under pressure as their need for expensive memory components becomes an investing risk, one that isn't expected to reverse anytime soon. They're in a tough position, said Rob Tummel, senior portfolio manager at Tortoise Capital, which has $9.1 billion in assets and runs an ETF dedicated to AI infrastructure. They basically have two options. They can take a hit to margins, which they won't like, or they can raise prices to offset the higher memory costs, running the risk of hurting demand. The surging demand for memory has contributed to what the tech research firm calls an unprecedented memory chip shortage, which it sees as a crisis for device manufacturers, and supply shortages lead to skyrocketing prices for the chips. Rising memory prices are also a risk for chip makers that provide semiconductors for smartphones, as noted in recent downgrades of Qualcomm by Mizuho and ARM Holdings by Bank of America. Again, it doesn't affect the AI companies. It just affects the phone makers. Results from Samsung last week showed that average selling prices for dynamic random access memory, or DRAM chips, jumped more than 30% quarter over quarter, while non-volatile flash memory, or NAND chips, rose about 20%. The higher prices, which are expected to continue throughout 2026, if not longer, contributed to Samsung's profits more than tripling. For an industry that's long been characterized by boom and bust cycles, this time is different, said analyst Francisco Geronimo in a December report. This is not just a cyclical shortage driven by a mismatch in supply and demand, but a potentially permanent strategic reallocation of the world's silicon wafer capacity. Yes, it is this way now, and therefore it will stay this way forever. This time is different. Okay, let's see if we can squeeze a few more cliches into the same analyst note here. Memory can represent between 10 and 20% of the material cost in consumer-facing hardware like smartphones, according to Geronimo. Hedgeye Risk Management last week said it has less conviction on Apple as the memory issues become more concerning. The ramifications for personal computer manufacturers are expected to be even more severe. In November, HP's profit outlook missed expectations. And during its conference call, company executives estimated that projected increases in memory costs would reduce its 2026 adjusted EPS by 30 cents. HP is the most exposed name in our coverage to secular pressures on PC margins and demand, said Goldman analyst Catherine Murphy in a note on Tuesday. She expects increased pricing actions to offset higher input costs for things like memory chips to have a material impact on PC purchases from lower-end consumers, where HP has more exposure than Dell in the second half of 2026. Again, everybody and their brother is affected by the memory shortage except the AI companies. No mention of NVIDIA, no mention of Supermicro. None of the companies that build data center hardware are affected by the memory shortage that affects everyone. Okay, got it. Meanwhile, BlackRock total assets hit a record $14 trillion as ETFs surge. More money for Larry Fink and co. BlackRock pulled in $342 billion in client cash in the fourth quarter, pushing the firm to a record $14 trillion of assets as it integrates a string of recent acquisitions to become a force in private markets. A string of recent acquisitions that, like before the ink even dried, cost them several $100 million in cockroach losses because of Carriox Capital. But I digress. Investors added $268 billion on a net basis to its long-term investment funds, including $181 billion to its ETF fund business that now has $5.5 trillion overall, BlackRock said on Thursday. The tally in the last 3 months of the year pushed the total annual haul, including money market and cash management funds, to $698 billion, setting a new record. BlackRock's adjusted EPS in the quarter rose 10% from a year ago to $13.16. That beat the average analyst estimate of $12.28. Revenue rose 23% to $7 billion from a year ago quarter. Operating expenses for the quarter rose 48% from a year ago to $5.3 billion as BlackRock continues its aggressive expansion in the private markets. They're spending a ton of money trying to recruit all that free money in private markets, basically your money. The firm increased its quarterly cash dividend 10% to $5.73 a share. BlackRock's private markets revenue for the full year roughly doubled to $2.42 billion from 2024. The asset manager is in the midst of transforming itself from a dominant player in stocks, bonds, and public markets into one of the largest firms in private credit and infrastructure markets globally. Fink plunked down about $28 billion to buy Global Infrastructure Partner and HPS Investment Partners and Preqin Ltd. in one of the biggest deal sprees to become a force in private markets, investing, and data. By the way, that investment in HPS Partners, within 2 days of that story being announced, BlackRock took several $100 million in losses associated with Banken Brombat and Carriox Capital. I did a video about that one a few weeks ago. Another one of those private credit cockroaches who was borrowing money against fake invoices that didn't exist. Yeah, I'm sure they're doing plenty of due diligence before pumping billions of dollars of other people's money into private credit. BlackRock stock up 5% on those earnings today. $1,147, up $53. Now on to the other black mineral. We've got Blackstone to offer private investments in Empower 401ks. All right, Empower is going to rebrand to Exit Liquidity Inc., apparently. Blackstone is partnering with retirement plan administrator Empower as the alternative asset giant pushes further to get its products into the accounts of everyday investors. Yes, bag holders wanted. Inquire within. That's what Blackstone is telling us here. Empower's private market investment partnership program will offer its customers access to Blackstone's funds via collective trusts. Blackstone manages $1.2 trillion of assets across private equity, credit, real estate, and infrastructure funds. Blackstone has also created a strategic alliance with Wellington Management and Vanguard to create multi-asset products and strategies for retail investors. Empower structures retirement funds that companies can offer to their employees. The administrator began offering private assets in its retirement portfolios last year, working with firms including Apollo and Franklin Templeton to bring more non-traditional investments to the masses. These guys are so generous, right? They're trying to democratize finance, bring these investments to the masses, empower people. It's certainly not about dumping toxic shit into your retirement account so that they can cash out before prices crash, right? No, these guys definitely have our best interests in mind, right? Don't answer that. Empower administers about $2 trillion of assets for more than 19 million people. 19 million people are going to have Blackstone private credit crap dumped into their 401ks now. And let's see, what are they doing? I'm sure these private credit firms are being very careful, right? And they're applying rigorous scrutiny and due diligence and putting all kinds of protections into these risky loans that they're making, right? Surely they must be doing that. And don't call me Shirley. Private credit drops safeguard to win deals on Wall Street terms. Oh, good. Private credit firms' efforts to reap leveraged debt business from Wall Street is coming at a steep cost. Safeguards that made them less vulnerable to an economic downturn. Once rare, the same kind of permissive terms that are widespread on leveraged loans are becoming increasingly common in the $1.7 trillion private credit market. Large borrowers with more clout are pushing for and getting so-called covenant-light terms, or cov-light. And the trend is only set to accelerate in a spate of recent deals is any indication. Traditional private credit carries maintenance covenants, limits on leverage that are tested regularly. As soon as a borrower breaches its limits, a lender can seek an equity injection from shareholders or private equity owners, push them into asset sales for the good of the lenders, or demand more collateral. In other words, all these things that protect the lender here. If a lender favors a debt restructuring or even wants to take over a company, a covenant breach would be a starting point. The problem is we're getting rid of those covenants. We're taking away all those protections. Why? Because all of this debt is getting dumped in your 401ks. It's not their money. See the earlier articles about Blackstone and BlackRock and their forays into private credit. The right to curb unhealthy debt levels is also a way for private credit firms to hedge risks like recession or tariffs that can zero corporate profits. But now direct lenders are making deals on the same terms as banks, breaking long-standing convention that gave them more rights to manage a borrower's debt. Top quality borrowers will command looser terms and or lower pricing, according to Hadrian Service, a partner at Simpson, Thatcher, and Bartlett. That is a lot of names. Look, guys, this is crap. This is crap debt. I mean, they're saying higher quality borrowers. There's no such thing. Nobody does any due diligence. See also Jamie Dimon's cockroaches. They're getting rid of the smoke detectors in a house full of gasoline and dynamite. Oh, it's going to be great. It's just going to go over just great. Luckily, it's only your 401k. So you got that going for you. All right, last one of the day. Keep an eye on this story, guys. I don't know if this is a trend or just a coincidence, but yikes. Fatal back-to-back Thailand crane failures tied to the same firm. The collapse of a highway construction crane killed 2 people near Bangkok on Thursday, with Thailand's leader vowing to blacklist the building firm, which was also involved in a crane failure the day before that left 32 people dead. Car dashcam footage verified by AFP showed the moment the massive crane fell Thursday, unleashing clouds of dust as well as rubble across the area as several vehicles pulled over or reversed to avoid falling debris. Motorcycle, okay, there's the name of these guys I can't possibly pronounce here. Transport Minister Fifit. We're just going to call him PR, all right? We're on an initial basis. We get along great, me and PR. Transport Minister PR linked firm Italian-Thai Development to the country's second deadly crane collapse in 2 days, according to local media. This company, Italian-Thai Development. And don't let the word Italian fool you in there, guys. This is a Thai company. It's totally Thai-owned and operated for whatever. I guess this company goes all the way back to the 1950s. Originally, there was some Italian guy involved. It's a Thai company. We have to find out the facts, Fitbit told local outlets. Italian-Thai Development was also contracted to build a section of a China-backed high-speed rail project where a huge crane fell on Wednesday, just a day earlier. That was in some province I'm not even going to try to pronounce, derailing a passenger train below, killing 32 of the nearly 200 people on board. So this Italian-Thai Development company involved in all these projects in Thailand, in 2 days, 2 crane collapses, killing 34 people. I can't help but wonder, is this related to the ongoing collapse of the property development industry in China, and by default, all the satellite countries around China, including Thailand? Are they cutting corners on safety because they're all going bankrupt? And I mean, what are the odds of 2 cranes collapsing in 2 days, from the same company. You think maybe the inspectors are cutting corners in this company? Or do you think maybe, I don't know, they're using shittier steel in the pins to hold these things up? Or the company bought a batch of lousy cable from the same manufacturer who used counterfeit steel? I don't know. There's got to be some common thread here. 2 crane collapses in 2 days, the same company. That is a lot of holes that need to line up perfectly. Probably going to hear more about this one in the days ahead. And guys, also in the context of that big fire in Hong Kong that we saw, where safety inspectors are cutting corners on the scaffolding that's being used, I think we're going to see a lot of accidents like this tied to this ridiculous overbuild of property in China and Southeast Asia in general. And I just want to say thank you very much to Mr. 4Ps. He's back again, says, looking at selling my silver for gold, as am I. I should say trading my silver for gold. I'm not selling it. What's the best way to do this? Also, what happens to the price of silver if contracts settle in cash versus delivery? Thanks. The price of silver generally is not affected, or at least on paper, it shouldn't be affected with the settling for cash versus delivery. That being said, if futures markets suddenly decide we're going to go to cash settlement only, we're not going to fill orders, it's going to cause a further divorce between the price of physical metal and the price on paper, because then there's no illusions about underlying physical metal. If it's forced cash settlement, then there's no reason to go into the futures market to buy silver for your factory or for any other purpose. So it's going to create 2 different markets. It would, if they do force cash settlement, it could bring about the collapse of COMEX of futures markets. So that is a desperate measure that they probably won't enter into lightly. They'll probably mess with the margin requirements before they do that, or take away the buy button. As far as what's the best way to do this for trading your silver for gold, on the phone is the best way to do this. Pick up the phone, go into Google Maps, find every nice wide radius, go out to 50 miles if you have to. Start calling local coin shops. Tell them what you want to do. I've got this many generic 1-ounce rounds and 10-ounce bars, and I would like to trade it for this gold item. How many ounces is it going to cost me? You're going to get a whole lot of different math. They're going to say, oh, well, we're selling these for this, we're selling these for this, and we're selling that for that. Make sure you do the math and figure out how many ounces of silver it's going to cost you to get the gold that you want. All right. And then pick up the phone and call their competitors and call their competitors and call their competitors. You will find that the prices vary wildly from coin shop to coin shop. A good, honest coin shop is hard to find. Once you find them, send them your business and keep them alive, because they're rare. There's plenty of shysters in the space. The prices will swing wildly. So put in the work on the phone before you do that. And in the process, you're probably going to find a shop that you really want to continue doing business with. For me, I had to radiate out a little bit. I had to get pretty wide before I found a shop that was good with their prices. It's a drive for me, and I have to factor in the burning of gas and everything and the time required to get there. But it's worth it. The price swings that much from shop to shop. Good luck, sir, and I'm probably right behind you looking to do the same thing. Thank you very much for supporting the channel. Steve Woitas says, Dear Melon Patch, be careful buying PMs from private sellers, eBay, etc. Yes. Or better yet, don't. Just throw that out there. More fake coins and bullion out there. F&A, dude. You know what? If you go to a local coin shop and you're buying something, you can ask them, hey, could you throw this thing on the Sigma for me? The Sigma verifier. Let me see that it's real metal. They'll do that. They might be a little bit insulted, but you could say, hey, I'm curious to see how it works. Would you mind showing me that? A lot of these guys like to talk. If they're super busy, they might be annoyed at you. But for the most part, these guys like to talk metals. So, you can have them verify it right there in front of you. When you're buying this stuff on eBay, there is no protection whatsoever. At the end of the day, there's a tracking number. Was it delivered? Yup, that's about it. You can open a case. Maybe eBay sides with you, maybe not. But ever since the price of metals has ripped, and it has ripped unbelievably these last few years, it's more profitable to create fake bullion products. There's going to be more counterfeits out there in circulation because there's more money in it now. So be careful. Avoid eBay. Abso-freaking-lutely. Thank you, Steve. That's good, sir. Appreciate the support of the channel. Grumpa5798, thank you for supporting the channel. USS Abraham Lincoln is en route to Iran, technically the Arabian Sea, but yeah, they got a twinkle in their eye towards Iran, absolutely. It's scheduled to arrive Sunday or Monday. We don't have a carrier near Iran due to Venezuela. I don't know. Is it true that we don't have any other carriers in the area? We almost always have a carrier somewhere near the Gulf. I could be wrong about that, though. We did send the Ford, and we did pull them from that region. So it's possible we don't have a carrier in that region. That being said, we've got so many air bases and assets in the Middle East. If we want to get froggy, there's nothing stopping us. The carrier heading there, it's one more option in a big arsenal. I mean, the last time we bombed Iran, we flew bombers and fighters all the way around the world, refueling along the way. Did we even? Carrier makes things easier, but it's not a prerequisite by any measure. But yep, they are sending another aircraft carrier, 100,000 tons of diplomacy headed towards the Arabian Sea. Thank you, Grandpa, for supporting the channel. Fantastic. That's a new one. Thank you, sir, for supporting the channel. Fantastic. The APMEX limit of $10,000 is for sales to APMEX, not purchase from APMEX. Okay, that's a big clarification. Let me verify that. I didn't catch that detail. Hold on. 10,000 minimum on the retail purchasing side. Okay. All right. Fantastic. Thank you for that. On the retail purchasing side. So does that mean them buying from retail? It means you can still buy less than 10,000 increments. I didn't make that connection when I read that. So they'll only buy $10,000 worth of metals from me. Thank you, fantastic, for that. I appreciate that correction and that clarification. I apologize for missing that detail. It's an important one. So you can still buy small amounts. Somebody want to verify that for me in the comments? Can you still buy small amounts? You just can only sell in $10,000 increments. All right, well, that makes me feel a little bit better, but not a lot of bit better. And still that effect on premiums, that is happening. Somebody just dropped in the comments, is junk silver still hard to move? It's hard to sell, but it's easy to buy, and you can still get junk silver for below spot, by the way. Good job catching, Jack. Yep, a couple of people saying understood wrong as well. Thank you very much, fantastic. 100 million melon coin coming your way for the attention to detail this morning. That was a fantastic catch on your part. See what I did there? All right. Thanks again for supporting the channel as well. Excellent, guys. Thank you so much for that. Purity of Wrath. Oh, that's scary. Ominous name. Says, forgo the hollow script of the merchant. Trade phantom values for blessed bullion. Okay. I like the Shakespearean dialect we got here. Forge your strength in unyielding steel. The emperor protects. Man, we're speaking in riddle here. Forgo the hollow script of the merchant. Trade phantom values for blessed bullion. Okay, so we're saying like dump your fiat and buy metal, right? I got my translator on. My universal translator's not working so well. Check 1 2. Okay, thank you, Purity of Wrath, for the ominous, dare I say, biblical language this morning. Appreciate the support of the channel as well. Another name I am bound to mispronounce: Balder LLC. Balder. Thank you, sir. I appreciate you becoming a Melonhead member. Welcome to the Melonhead, sir. Thank you for supporting the channel. Just a reminder, guys, new members, you get one free super chat every month. Use that, and I will read and respond to your questions, thoughts, comments, live and on the air. Thanks again, sir, for supporting the channel. Thanks again for fantastic. I really appreciate that clarification. That's a big detail that I missed the first time around, but there it is. It's on the purchasing side. You can still buy under $10,000. All right, guys. Thank you, everybody, for having your coffee with the Melon Heads this morning. Don't forget that like button and that subscribe button on the way out. Thank you also for all the generosity in the super chats. I appreciate that very much, as well as you magnanimous Melon Heads on YouTube, Patreon, and Buy Me a Coffee. Thank you, guys, for supporting the channel. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.